Hey folks, welcome to today's YouTube Live for the Steady Trader. What I want to talk about today is why pretty much no one makes money in bear markets. Now, let me just say something. If you're an amazing trader and you actually have a plan and a strategy, then yes, I do think one can make money in bear markets. But there is a very specific reason why that saying holds, that most people, even the bears, don't make money when the market drops. Okay, so as you'll see in the charts in just a second, obviously the bulls don't make money. Why? Well, because they're fully invested at the top of the bull market, and then when the bear market comes, they're failing to acknowledge that we've changed into a new environment. We'll show you that in a minute. But also the bears actually lose money in bear markets, and there's a reason for that you may not have thought about before. And it's statistically proven, and I can tell you that with a lot of bears that I know, they actually don't make money in bear markets. And there's a very specific reason for that, because they're underestimating the how sharp the counter reaction rallies can be. Let me say one last thing before we look at the charts. Measuring and mapping changes in market trends requires a process. If you think you can just wing it, either in bull markets or in bear markets, you're badly mistaken. So you need a process. That's what we do all day long, all week long, or month long, all year long with Clubhouse members and coaching clients. And there's a reason why we do it. We don't just do it for fun. So let's have a look at the charts. So I'm going to show you just a very simple chart. This is the XLE. It represents energy stocks. And you can see that energy stocks here for some time had a bull market, namely from about here to here, right? And you can do some very simple measurements of this. You know, this is an oversimplification of the process, but you can see by drawing some very simple lines that at some point here, we started getting into a bear market making lower highs. Now the bulls, I can tell you, very much like what we seen in technology, large cap tech stocks recently, the bulls got fully invested, not here, but about here, okay? So they're going to be in complete denial as we make lower highs, and maybe that's going to happen in tech stocks right now. I don't know. That's not my base case. But I'm just telling you that's basically what's happening to the bulls at the point of any market that turns bearish. So the bulls are not going to admit to themselves that the market has changed, mostly because they just don't have that in them. There's a lack of process, and they're going to write this whole thing down at least for some good time. Now, the bears at the same time, who probably were bearish all the way through up here. Maybe they even get bearish again on the way down, but the problem is that they're underestimating the counter move rally. So for example, look at some of these counter move rallies. So from the lows here to up here, that's a 15% move, okay? Constantly you have these 15% counter trend rallies. You can even get 20% counter reaction rallies. So people the bears get more and more bearish, the market drops, and then the market, they don't think the market can snap back more than a couple percent. But then you get these 15, 20, 30% rallies to the counter, right? So for example, looking at Facebook right now, we've talked about Facebook all week long, and I'm not saying this is the end of Facebook, but what I do want to show you is that let's assume just for argument's sake, that Facebook right now is going to ultimately make lower highs. Well, Facebook from this point on can rally like well more than 20% and still make lower highs and ultimately potentially start going lower again. This is why the bears also lose money in the bear market, because they don't understand how sharp these counter trend rallies are. And guys, if you guys have questions on this, if you right now in the live session, if you want to give us a thumbs up like, or if you hate it, whatever you want to do, please give us some reaction here. I want to make sure people understand this is a really, really important part, because we do think, and I'm going to hold our Q2 Market Outlook webinar for Clubhouse members next week, and all the other memberships we have. We're going to talk about this phase transition that I think we're in and how that could ultimately lead to lower highs. We've already seen lower highs in the S&P 500. And so that's, I think, is ultimately what's going to cause issues here for people. Now, again, I'm not saying no one at all, not one single trader can make money in bear markets, but historically speaking and statistically proven, most bears don't even make money in bear market. It's because they underestimate the sharpness of the counter reaction rally. So like even in the S&P, look at the move we had just to get to lower highs in February. That was a 10% counter reaction. In fact, it's a little bit more. It was like a 12% counter trend move at that time. Made lower highs. I'm not saying the reaction is over, but that's basically. I'm not saying the bull market is over, but that's basically why not just the bulls, but also the bears actually usually lose money in bear markets. So, as always, I hope this was helpful. If you guys have any questions, comments, concerns, leave them down below. Give us a thumbs up, and I will see you guys again in the next YouTube Live.